So thank you everybody for joining us today. Our entire team here would like to wish you and your family a very happy holidays, and thank you for taking a little time out of your day here in December to join us. 2020 has certainly been an exciting year in the capital markets. And as a result of the global pandemic, we've had multiple tax acts pass with several moving parts that can be hard to track and understand. So we thought we'd use this webinar as an opportunity to share with you some of the important changes that will be ending this month, as well as some changes that you may not be aware of that will continue into the future. Our hope is that at the end of this, you'll have a deeper understanding of how these different tax changes and different contribution amounts could impact your personal financial plan. Now, we'd like to make this as interactive as possible today, which means that we'd love for you to have the opportunity to ask questions. We've got the line muted to make sure that we don't have any background noise, but you've got the ability to ask questions here through the video conferencing app. So if you run your mouse over the video conferencing screen, at the bottom, you'll see a ribbon. In the middle, you'll see the green screen share icon. And just to the right of that is a chat icon. And if you click on that chat icon, a window will open that will allow you to type in a question that you can ask. So feel free to ask any questions you'd like, whether it's on the topic we're discussing or not. We're happy to answer any questions that you've got today. So although we don't have the intention to discuss performance today, we do want to show our disclosure in case in the Q&A we get into, we have any discussion on performance. We just want to make sure everybody remembers past performance is not a guarantee of future results. So before we get started, I just wanted to thank our team, make sure everyone's had an opportunity to remember all the key people that work to support you throughout the year. On the right-hand side, we've got Rachel Rant and Bryn Penner, who are on our operations team. And then on the left, you've got myself, Katie Dow, and Joanna Adelson on our advisor team. This is a team that's worked hard this year. It's been an emotional year. It's been a bit of a crazy year in financial services, whether it was the work that we were doing back in the spring around rebalancing portfolios and tax loss harvesting, or the time that we spent this fall working with people through the election and whatnot. I just want to personally thank the team for all of their great work this year. So our objective today is to keep this to about 30 minutes. We just want to give you a quick update on some of these important things that are either ending or extending into the future that we think it's important you be aware of. We're going to start with a discussion on the Biden tax plan proposals that you've seen in the press or in the media, and give you our take on how we view those different proposals. And then there's two different tax acts, the CARES Act and the Secure Act, that came about in the last year. And Joanna's going to share some thoughts with you to make sure you fully understand some of the primary benefits of those. And then Katie's going to share with you some changes and reminders specifically around, dollar contribution amounts and whatnot that we want to make sure you're aware of going into 2021. Rachel's going to share with you some great news on a new client portal that she and Bryn have been working hard on really for about the last 6 months now, getting set up and ready for your launch in January. And then at the very end, I'll cover the Schwab TD Ameritrade acquisition. Most of you may have seen in the press that acquisition closed here in the fourth quarter, and we just want to make sure you understand what to expect here over the next couple of years. So with that, Katie, why don't you get us started on the Biden tax plan?
Great, thanks, Mike. Hello, everyone. It's so nice to be here with all of you today. Well, it's been an interesting year, hasn't it? A challenging year for most, and we've been through a lot, including an election that took place in November. But we've made it to December now, and we can stop talking about that election now, right? Well, not exactly, not quite yet anyway. So you will remember that in November, America witnessed one of the most contentious elections in our history. And although some of the media outlets led us to believe that the world was going to come to an end or that the stock market was going to crash, You'll notice November turned out to be one of the best equity markets on record. In fact, it was the best performing single month on record for small cap stocks and the best month for the Dow Jones Index in over 30 years. With that being said, there are still a few factors causing fear among investors as President-elect Joe Biden is set to take office in 2021. And one of those factors is the proposed Biden tax plan. On your screen, you'll see a few of the most significant changes proposed in that tax plan. And as the dust settles and we move into a Biden presidency, many Americans are asking, should I be worried? Well, we believe the answer is no, and this is why. The president-elect's tax plan is really on life support before he'll ever even get into the Oval Office, because the chances of raising taxes on businesses and high-income individuals likely rest on whether Democrats can win two January runoff elections in Georgia to take control of the U.S. Senate. If Republicans keep their grip on the Senate, any proposed tax increases are likely to be blocked. So regardless of what any news or media outlets, including Facebook, might be saying, we don't expect hardly any or possibly even no changes to the current tax plan. So for now, it's status quo. Until we know more, there is no need to act on the chance that the tax rate might go up. However, there is one thing to remember about the current plan that's in place. In 2018, the estate tax exemption was doubled to $11.8 million for singles and $22.3 million for married couples. This is set to sunset and will go back to the original exemption limits in 2026 if there is no change to the current plan. If you have any questions about that, please go ahead and drop that into our chat box, as we'll be getting to those questions throughout our presentation. And with that, let's go to Joanna for information on the CARES Act and the Secure Act.
Thanks, Katie. Hi, everybody. So I'm going to cover a couple reminders of bills that passed in the last 12 months. The first being the CARES Act, otherwise known as the Coronavirus Aid, Relief, and Economic Security Act. This was passed and signed into law back in March in response to the economic fallout of the pandemic here in the US. So just keep in mind that these changes are only in place for 2020. And that includes required minimum distributions are waived for this year. And this also pertains to inherited IRA accounts. But keep in mind that RMDs will be back for 2021, and this is only for this year. Another change for this year are charitable deductions for those who do not itemize. If you made a charitable donation of $300, you can take that deduction this year. These are only for cash donations to public charities and don't include donations to donor advised funds. This doesn't mean you can't make a donor advised fund donation. This is only if you want to take $300 deduction if you don't itemize. So please check with your accountant and let them know if you made a donation of $300 or more. At the end of 2019, Congress also passed a major retirement bill known as the Secure Act. And this stands for Setting Every Community Up for Retirement Enhancement Act. These changes are effective as of January 1st, 2020, which pertains to IRA accounts and retirement plans. Unlike the CARES Act, these changes are permanent moving forward. So a reminder that required minimum distributions age changed to 72. It was previously 70 and a half years of age when you had to take your IRA distribution, but now that is age 72. It also removed stretch inherited IRA distributions. So all inherited IRA distributions must be taken out with 10 years. And this is effective for IRA owners who passed after the end of December last year. However, qualified charitable distributions are not affected. If you are age 70 and a half, you can make a charitable donation from your IRA account. So for some clients, it may be more beneficial to make a charitable donation from your IRA account versus a cash donation or a donor advised fund donation. So please reach out to your advisor if you have any questions or want more information on this. I'll pause here, and Mike, are there any questions from our listeners?
Yeah, thanks, Joanna. We do have a couple of questions. So let me start with you, and then I'll. I think there might be one here for Katie as well. Joanna, so in regards to the CARES Act, if somebody asks, if I took my required minimum distribution already, can I deposit it back into my IRA?
Yep, that's a good question. Yes, you can deposit it back into your IRA, but it has to be within 60 days of when you took that RMD. So unfortunately, if you took your RMD, let's say in February, that 60-day has passed and you won't be able to deposit it back.
Okay, great. And then with respect to the Secures Act, if someone already started taking required minimum distributions, can they hold off and wait until they reach age 72?
Unfortunately, if you were already taking an IRA distribution, you will continue to do so. You can't hold off and wait until you reach 72. So this is only going to take effect for people who have not reached 70 and a half by this year.
Okay, great. And Joanna, on the tax side, question here is the $300 above the line charitable donation for single or married filing jointly, or in other words, would it be $600 for somebody that was married?
Yeah, that's a really good question. Unfortunately, it's a total of $300, regardless if you file single or you file married jointly. So it's just a total. It won't be able to double.
Okay, great. I think that's all the questions at this point. From here, why don't we pass it over to Katie? Katie, if you can talk to us a little bit about some of the changes coming in 2021.
Sure, of course, happy to do that. So here are some year-end reminders on your screen. You'll see these are important reminders, both for you to know for end of year, and then at the bottom, there's some Aspen Capital Management deadlines as well that I'll cover. So first, what are some year-end reminders that you have to know for your taxes? So the first 529 plan contributions are due by the end of the year. Any IRA to Roth IRA conversions are also due by the end of the year. And of course, any gifting and charitable donations are due. And that includes that $300 charitable donation that Joe spoke about earlier. Now, in order for us to make sure that we can process this by the end of the year, we have some deadlines of our own that we ask you to please be in mind of when you're requesting some of these contributions or conversions. So at Aspen Capital Management, for us to process your requests, we are requiring anything in the black to be sent over to us by December 15th. So that's that 529 plan, IRA to Roth IRA conversion, or year-end gifting and charitable donations. Any new account openings, we ask that you have those requested or emailed to us by the 18th of December. And finally, any transfer requests that you want in 2020, please have those to us by December 23rd. Now, as we move on to what is arguably one of the most anticipated years ever, 2021, a new year, we have some things for you to know about as far as contribution levels that are staying the same or increasing or changing. So first, let's talk about what's staying the same. We have your IRA contributions. That max is going to stay the same at $6,000 plus a $1,000 catch-up if you're over 50. The 401k deferral limits are maxed out at $19,500 plus $6,500 catch-up if you're over 50. And of course, the annual gift exclusion is $1,000 per individual. Now, changing, your deferred contribution plans are increasing by $1,000 up to a max of $58,000. The Social Security cost of living adjustment is at 1.3% for 2020 and 2021. And the standard deduction is increasing to $12,550 for singles and $25,100 for married filing jointly. Health saving accounts, so HSA contributions, also are increasing. The max is $7,200 for couples and $3,600 for singles in 2021. With that, I think we'll pause again, Mike, and I'll see if there's any questions.
Yeah, we've definitely had a couple of them come in here, Katie. So the first one is, what was the previous cost of living adjustment for Social Security, and has that changed?
Yeah, so great question. The previous cost of living increase was 1.6%. So it is down from the previous year. But what's important to note is there's not a cost of living adjustment every single year. So a 1.3% increase is a nice increase for next year.
Okay, Katie, another question here is, can I convert part of my IRA to a Roth IRA, or do I have to convert all of it?
That is a great question. So you do not have to convert all of your IRA into a Roth IRA. You can do a partial conversion, but what is important here is that you work with your accountant to figure out what that max conversion amount is that will be most beneficial for you on your taxes and won't kick you to a higher tax bracket. So make sure you work with your accountant, and we can help you with that too if you're still looking for that number.
Great. Rachel, a question here maybe you could take is, in Katie's previous slide, when she was talking about the deadline requirements here for the end of the year, she mentioned transfers. And we've got a question here of what is a transfer request?
Yeah, I'm happy to take that one. So a transfer request is in regards to new accounts. If you want to transfer an account outside of Aspen Capital's management into TD Ameritrade, or if you want to transfer money from an outside account or set up a new Move Money link with your existing accounts.
Great. That looks like all the questions for now. So Rachel, why don't you spend just a minute here and share with people some of the great news on the new client portal system that they've got coming.
Yes, we do have some exciting news on the client-facing front because we will be rolling out our new client portal in January of 2021. So this portal, as you can see on the screen, allows you to log in and view your up-to-date account data in a couple of different ways. And as mentioned, this will be launching in January of 2021, so next month. And it will provide access to holdings as well as access to performance reports, year-end tax information, and direct access to TD Ameritrade statements and tax forms. Other perks of this portal will include a new secure document vault for us to share documents back and forth with each other, and access to your financial plan Monte Carlo simulation results. Many of you have gotten used to seeing the dial that we have pictured on this slide in your financial plan, and you'll be able to view that dial and see your probability of success rate within the new client portal as well. Lastly, we will be rolling out a mobile app in regards to the new client portal. This will be rolling out sometime in the first quarter, but it will be after the web browser launch of the client portal itself. And I want to take this opportunity to talk about some other resources we have. When we launch the new client portal, we will have a variety of resources available to you to learn how the new portal works. But we currently also have some other resources available in regards to how you interact with TD Ameritrade and other softwares that we use. So if you go to the homepage of our website, you'll be able to see the resources tab on the up ribbon at the top of the screen. If you click on resources, you will then have the capability to navigate to our video tutorial library. And this has links to a variety of video tutorials on areas where you might need assistance or would like to learn. 2 examples would be if you need to log in and either change or reset your password for TD Ameritrade. And then also if you want to log into TD Ameritrade and move money yourself. So there's a variety of videos available on this page, and there will be videos for how to use the new client portal on this page too coming in January. So Mike, why don't we pause here and take some more of the questions that have come through.
Rachel, one, while we're on this screen actually, that came through is, does TD Ameritrade have any security features for their online access that I'm not aware of?
Yes, it is perfect that we're on this screen actually, because a security feature that we highly recommend enabling is two-factor verification. And as you can see under the TD Ameritrade logo on the screen, we do have a two-factor verification setup video tutorial that will teach you how to set up multi-factor authentication through TD Ameritrade.
So Rachel, a couple of questions came through on the client portal. First one is, will clients be able to see their information at the account level, or just the total portfolio level in the client portal?
That is a great question. So in the new portal, you'll be able to see it at the aggregate portfolio level, the account level, the asset class level, and the actual asset level itself. So there are multiple layers that you can dig down into to view your portfolio details.
So another question here on the portal. One of our clients said, the client portal looks great. Will it pull from various different account sources? The question here is, will it pull just from TD Ameritrade accounts, or would it also pull in from like a client's 401k or maybe deferred compensation account?
So the portal is going to show all of the accounts that are under Aspen Capital's management. So if you have held away accounts like 401ks or deferred compensation plans or anything like that, that will show up in the portal, as well as all of your TD Ameritrade accounts. So you should be able to get a holistic account view.
That's great, Rachel. Last one here on the portal is, what's the portal's go live date?
So we don't have a specific date. It will be in the first half of January, and we'll be in touch with more information once we get that specific date finalized. But you can look forward to more communications from us on what that date will be in January.
Great. Thank you, Rachel. And again, thank you to you and Bren both for all of your work this year on getting that system set up and ready to launch. So the last thing I wanted to do today was just take a minute and walk through with people some information on the Charles Schwab acquisition of TD Ameritrade. As I mentioned earlier, the acquisition actually closed in the fourth quarter of this year, so it's a done deal. This is a little bit different than a lot of mergers in that TD Ameritrade, even post-merger, is continuing to operate as a standalone company. That's not going to happen forever. But with two financial services firms of this size, the integration of the two is going to be substantial. And that's what they'll be working on really over the next year or two. And during that time, TD Ameritrade will continue to operate on its own. So really for both us as well as you as our clients, it's really going to be business as usual from what we're told for at least the next 18 to 24 months. So we don't expect you to have any changes in 2021 with respect to, how you receive your statements and your tax forms at the end of the year, as well as your online account access. We expect that that's going to remain unchanged throughout 2021. We will certainly be proactive in communicating in the future to you as the different systems and processes begin to change, as you start to have to go to maybe a new website to log into your account, and some of the different, maybe systems and views are different. We'll be proactive in communicating to you what those changes look like. A few benefits, though, that we see in this transaction for our clients. As I mentioned, these are two really large financial services institutions. When you put the two of them together, the combined firm will have $6 trillion in assets that they custody for clients, and the combined firm today is responsible for 5 million trades a day. So in terms of the discount brokerage model, the combination of these two firms is really going to be unprecedented historically with respect to just the scale that they're going to represent. As a firm, historically, Charles Schwab is a firm that has both a legacy and a culture of driving down fees and expenses versus regional or national banks or brokerage firms. They've been doing that for decades, and it's really a part of the culture of the firm. We think our clients will continue to benefit from that in the years to come. And then finally, Charles Schwab is a little different than TD Ameritrade in that Charles Schwab actually does own their own bank, Schwab Bank, unlike TD Ameritrade, who did not own a bank and they're a pure discount brokerage firm. So we do expect that our clients in the future, post-merger, will have access to better banking and lending capabilities through Charles Schwab's offering. And then finally, I just wanted to give you a quick sneak peek of what's coming up in Q1 of 2021. You may remember we always do a year-end webinar. We will be doing that again in the first quarter of next year. So really just in the next couple of months, we'll be back with another webinar. Some of the things we'll be touching on there is definitely going to be a detailed review of this year, 2020, and some of the important rebalancing and tax loss harvesting that we did back in the spring. We'll for sure be going through 2020 performance in detail. And then one thing we're actually really excited to share with you is we're going to have, for the first time ever, we're going to have a portfolio manager from Dimensional Fund Advisors join us for a discussion on the DFA investment grade bond portfolio. This is the largest bond fund holding that our clients own. And it's a fund that has had tremendous performance both over the short term during 2020, as well as really since its inception. And it's got some really interesting different strategies that it follows that have really led to adding value versus the benchmark index over both the short, mid, and long term. So we're going to have a portfolio manager from Dimensional join us to walk you through, specifically in 2020, how the rules-based strategy that this fund implements really added value during the year as credit markets adjusted to the volatility throughout the year during the coronavirus. And then finally, we always like to end on some good news. Dimensional Fund Advisors has announced that in February of next year, they're going to have expense ratio, mutual fund expense ratio reductions ranging from 15 to 25% across some of their different funds. Most of the funds that we own are going to experience some really nice expense ratio reductions in the first quarter of next year. And so we'll be sharing with you the details on those lower fees and expenses in our first quarter webinar of next year. So with that, let me go to any final questions that we see coming through. Looks like the one question that we do have is a question around fees. And the question is, with respect to the Schwab and TD acquisition, are we expecting any changes in fees? And the answer to that is we do not expect any changes in fees. You may remember that at the beginning of this year, actually Charles Schwab led the way in driving both individual stock and exchange traded fund transaction fees to zero. TD Ameritrade then followed suit quickly, but they really have driven much of the cost out of trading both stocks and ETFs. And then on the mutual fund side, the relatively small transaction fee that we do pay for trading mutual funds, at this point, we have no reason to believe that that's going to change. On some of the transaction-based fees, as you probably know already, with TD Ameritrade moving money, both ACH and wire, both in and out of TD Ameritrade, there's no charge from TD Ameritrade for any of those transactions, and we don't expect that there's going to be any with Charles Schwab either. Well, it looks like that's all the questions. So we just wanted to say thank you for joining us today. We appreciate you taking time out of your busy schedules. And as I mentioned at the beginning, our entire team would like to wish you and your family a very happy holidays. So please be safe and be well.